We shall start with Meridian Berhad background. It is an investment company type of business. It was founded on the year 1993, and its mission is to strive for excellence and carve a reputation as an innovative, reliable, and dependable developer. The company's segment is property development, construction, and property investment. Such of their successful projects is the ARC at Cyberjaya project, the Summit Bukit Mertajam project, and the Summit Subang USJ project. As for XOX Berhad background, they are a technology-based company founded on 2005. Their mission is to empower Malaysians with the digital capacity to sustain and to generate income, and at the same time to help those who have faltered. Their history began as a telecommunication company, launched its first ever prepaid SIM card, and in 2010 introduced hybrid plan such as prepaid and postpaid. In the year 2018, they have expanded their brand to Indonesia. They have joint venture agreement like Perkumpulan Madyatul Ulama, EN Integrated System Sdn Berhad, PT Nusantara Mobile Telekomunikasi.
The first ratio that I will present is liquidity ratio. As that liquidity ratio is a financial metric used to assess debtor ability to pay current debt obligation without raising external capital. Liquidity ratio divided by two, which are current asset ratio and quick ratio. Current ratio is a liquidity ratio that measures company ability to pay short-term obligation or those due 1 year. To get current ratio, we divide current asset with current liability. Next, quick ratio. Quick ratio is an indicator of company short-term liquidity position and measure the company ability to meet its short-term obligation with its most liquid asset. To get quick ratio, we divided quick asset with current liabilities. To calculate current ratio of Meridian Berhad, we divided their current asset with their current liabilities, and we got 1.09. This value indicates for every 1 ringgit in their current liabilities, the company has 1 ringgit and 9 cents in current asset. This value also shows that the company managed to cover their short-term debt with their current asset. To calculate current ratio of XOX Berhad, we divided their current asset with their current liabilities, and we got 1.07. This value indicates that for every 1 ringgit in their current liability, the company has 1.07 ringgit in their current asset. This value shows that the company managed to cover their current liability with their current assets. For comparison, both of the company has slightly different current ratio, which only different 0.02. However, the current ratio of Meridian Berhad is better than XOX Berhad because it's greater than XOX Berhad current ratio. To calculate quick ratio of Meridian Berhad, we divided their quick asset with their current liabilities. To get quick asset, we minus their current asset with the inventories and then divided by their current liabilities, and we got 0.02. This value indicates for every 1 ringgit in their current liability, the company has 0.02 in liquid asset. To get XOX Berhad quick ratio, we divided their quick asset with their current liability. To get quick asset, we minus their current asset with their inventories and divided with their current liabilities, and we got 0.94. This value indicates for every 1 ringgit in liability, the company has 1.94 cent in their liquid asset. For comparison, both of the company doesn't enough liquidity asset to cover up their current liabilities. However, XOX Berhad quick ratio is better than Meridian Berhad because the value is much greater than Meridian Berhad, which difference 0.92.
The second ratio that I will present is activity ratio. Activity ratio is a class of financial metrics measure how well a company uses asset to generate revenue and cash. Firstly, the total asset turnover, a ratio that measures how efficiently a company uses its asset to generate sales. Secondly, account receivable turnover, a ratio that measures the number of times a company collects its average account receivable balance. Next, calculation of total asset turnover by Meridian Berhad. Total asset turnover, which are 0.02. Company has 0.02 ringgit in sales for every 1 ringgit in asset. Total asset turnover by SOX Berhad, which are 0.77. Company has 0.77 ringgit in sales every 1 ringgit in asset. The comparison of two companies are SOX Berhad demonstrate significantly better asset efficiency than Meridian Berhad, with a total turnover of 0.77. SOX generates 0.77 ringgit in sales per 1 ringgit of assets compared to Meridian's Berhad low turnover of 0.02. Next, calculation of account receivable turnover. Account receivable turnover by Meridian Berhad is 4.92 times. Company managed converts its receivable into cash 4.92 times a year. Next, SOX Berhad. Account receivable turnover by SOX Berhad is 19.25 times. Company managed converts its receivable into cash 19.25 times a year. The comparison calculation of receivable turnover SOX Berhad outperformed Meridian Berhad in account receivable turnover. Converting receivable into cash 19.25 times annually compares to Meridian Berhad, which are 4.92 times. This highlights SOX superior efficiency in cash flow and receivable management compared to Meridian Berhad.
Assalamualaikum warahmatullahi wabarakatuh. My name is Mohd Al-Razziq bin Muhammad Rudyhizat. My numeric is 301482, and now I present about profitability ratios. So profitability ratios is a class of financial metrics that are used to assess a business ability to generate earnings relative to its revenue. Operating costs, balance sheets, assets using data from a specific point in a time. Profit margin on sales is a measure of company's profitability expressed as the percentage of revenue that the company keeps as a profit. So the formula for profit margin on sales is net sales over net income times 100. And for return on common shareholders' equity, a financial ratio that indicates how profitable a company is in relation to its total assets. So the formula for return on common shareholders' equity is net income minus by preferred dividend divided by average common shareholders' equity, and that is the formula. Assalamualaikum. My name is Mohd Al-Razziq bin Muhammad Rudyhizat, numeric 301482. And now I will explain about profit and margin sales. The profit and margin sales of negative 455% shows Meridian Berhad is not generating enough profit to cover their expenses. The value of negative 455% indicates that for every 1 ringgit of sales, company loses 4 ringgit and 55 cents. A loss margin indicates that Meridian Berhad's revenue is insufficient to cover their cost. SOX Berhad's profit margin on sales stands at negative 25%. Implying that for every 1 ringgit generated by sales, company has lost 25 cents. This value indicates the company's revenue is slightly insufficient to cover their costs. Therefore, both organizations face monumental challenges in terms of profitability. However, Meridian's Berhad financial problems are far more critical. On the other hand, SOX Berhad incurs a loss with a more manageable gap between revenues and expenses, putting it in better shape to work towards recovery. And now we continue our return on common shareholder equity. The negative 13.82% return on equity ROE indicates that Meridian Berhad is not generating a positive return in investment made by its shareholders. The value of negative 13.82 shows that for every 1 ringgit invested by shareholders, the company loses 0.1382. This loss gives a negative impact to the ability of Meridian Berhad to attract future investors to invest in their companies. The negative 35% return on equity ROE reflected by XOX Berhad indicates that the company not only unable to generate a return for shareholders, but also losing a significant portion of equity that they invested. This value also indicates that for every 1 ringgit in shareholders' equity, the company has lost 0.35 cents. This 0.35 ringgit. This area creates critical issues for both companies, but for the negative ROE figures, it is made clear that XOX Berhad situation is more critical. Thus, it also needs urgent remedial measures taken to stabilize and improve its financial positions. Meridian Berhad is struggling, but in a comparatively less desired situation.
Next is leverage ratio, a type of financial measurement used in finance, business, and economic to evaluate the level of debt relative to another financial metric. First is debt to asset ratio, a financial metric used to help understand to the degree which a company's operations are funded by debt. It is one of many leverage ratios, but that may be used to understand a company's capital structure. Next is debt to equity ratio. It's used to evaluate companies' financial leverage and is calculated by dividing a company's total liabilities by its shareholder equity. The debt equity ratio is an important metric in corporate finance. Next is calculation of debts to assets ratio. For Meridian Berhad, got 0.3569 indicates that in about 25.7% of the total assets are financed through borrowed funds or debt, while the remaining 64.3% is financed through equity or non-debt resources. For XOX Berhad, got 7.57% indicates that 57% of total assets are financed through debts, while the remaining 43% is financed through equity. For the comparison, XOX Berhad has higher financial risk, which is 35.7% due to greater debt reliance, while Meridian Berhad is more stable with higher equity financing, which is 57%. Next, calculation of debts to equity ratio. Meridian Berhad indicates the company has 0.55 in debts for every 1 ringgit of shareholders' equity, while XOX Berhad indicates the company has 1.26 ringgit in debts for every 1 ringgit of shareholders' equity. For the comparison, Meridian Berhad debt to equity ratio is 0.55, which is the company has 0.55 ringgit in debts, while XOX Berhad debt to equity ratio is 1.26, which is the company has 1.26 ringgit in debts. Meridian Berhad is more financially stable, while XOX Berhad relies more heavily on debt.
Is the suggestion to improve current performance of Meridian Berhad. First, enhancing operational efficiency is crucial by adopting automation tools, lean management techniques, and optimizing its supply chain. The company can reduce costs and improve productivity. Secondly, on the organizational front, fostering a strong company culture through employee development programs, promoting diversity, and prioritizing well-being will enhance morale and retention between the employees. Thirdly, expanding market reach, both geographically and by targeting new customer segment, will help diversify revenue streams and mitigate risk. Strategic partnership, joint venture, and exploring emerging markets are essential to this approach. And finally, corporate social responsibility or CSR initiatives focus on sustainability and community engagement can boost the company's brand image and build long-lasting trust with the stakeholder. Now, we are heading to suggestion to improve current performance of XOX Berhad. To improve its current performance, XOX Berhad could focus on revenue growth by expanding its product and service offering, targeting different customer segments, and leveraging digital marketing to increase brand visibility. Forming a partnership with the popular brand or fintech companies can further enhance its reach on the cost management front. The company should optimize operational expenses by renegotiating supplier contract and adopting automation tools to improve efficiency. Monitoring cash flow and maintaining liquidity is equally crucial. Thirdly, XOS Berhad should prioritize reducing high interest debt and diversify income stream to ensure stability. Additionally, investing in growth areas such as 5G technology or mobile app development can position the company for a long-term success. Finally, staying updated on industry trends and conducting regular competitor analysis will enable XOX Berhad to adapt effectively to market demands and improve its competitive edge. We have come to a conclusion. Both Meridian Berhad and XOX Berhad demonstrate unique strengths and challenges based on their financial performance. Meridian Berhad shows moderate liquidity and conservative leverage, reflecting stability and also significant inefficiencies in asset utilization and a dire need to improve profitability. On the other hand, XOX Berhad, while demonstrating relatively better operational efficiencies and liquidity metrics, faces higher financial risk due to its heavy reliance on debt and substantial profitability issues. To improve their performance, both companies need to focus on enhancing operational efficiencies, optimizing cost structure, and implementing strategies to boost revenue while maintaining financial stability. With targeted improvement, both companies can strengthen their financial position and achieve sustainable growth.